During high inflation, when money loses its buying power, smart investors seek investments that not only maintain their value but also have the potential to grow. Meanwhile, central banks strive to keep inflation low to ensure economic stability. When prices rise quickly because of inflation, your savings and investments might not seem to grow since what you can buy with your money shrinks. This is why finding the right investments during periods of high inflation is essential for protecting and potentially growing your wealth. Now, let's talk strategy. There are several types of investments which have historically performed well during periods of high inflation. It's important to note that past investment results don't guarantee future performance, and there is always a risk of loss. How good your investments turn out will depend on your own situation and the current market conditions. Here are the 7 investments that are often recommended during high inflation, ranked by their benefits, security, and risk. 1. I-bonds. These are secure U.S. bonds that safeguard against inflation and provide attractive interest rates, offering high security and moderate benefits. They are considered low risk because the government guarantees repayment, so there's almost no chance of losing your investment. With I-bonds, certain taxes are not applicable, and you can purchase up to $10,000 worth of I-bonds annually online, plus an additional $5,000 with a tax refund each year. They appreciate in value over 30 years, but early withdrawal may result in a loss of some interest. I-bonds are a prudent investment that safeguards against inflation and provides tax advantages. However, they should be incorporated into a comprehensive financial strategy. 2. Treasury inflation-protected securities, or TIPS. These are high-security government bonds that adjust with inflation, ensuring your investment grows if prices increase, offering moderate benefits and being low risk. They pay interest twice a year based on the bond's current value, which means you earn more as inflation rises. You can choose from 5, 10, or 30-year terms, and at the end, you receive the higher of the original or adjusted amount. While the interest is subject to federal tax, there is no state or local tax. TIPS provide stability and capital protection with lower yields to keep your money's value stable over time. Ideal for conservative investors focused on preserving purchasing power. 3. Real estate investment trusts, REIT. These investments, characterized by moderate security and high benefits, pose a moderate risk and can help your money grow, especially when inflation drives up property and rent prices. Buying property directly demands significant capital and management responsibilities. Real estate investment trusts, REITs, offer a simpler alternative. These companies handle properties like apartments, hospitals, and malls. Instead of dealing with actual buildings, you can invest in REITs by purchasing shares. The benefits include risk diversification, quick share liquidity, regular dividend income, and protection against inflation. However, keep an eye on interest rate fluctuations and market downturns, as they can impact REIT values. Also, remember that dividends are taxed as income. Overall, REITs are a smart option for real estate gains without the complications, especially for cautious investors. 4. Dividend-growing stocks. Dividend-growing stocks are companies that increase the dividends they distribute to their investors, which is particularly useful during times of inflation. These stocks offer a balance of security and benefits, making them advantageous during periods of rising costs, as they can align with inflation to provide a consistent income. They often hail from robust sectors like food, utilities, and energy, which tend to perform well even when prices rise. These companies have made significant contributions to the stock market's overall growth. In short, dividend-growing stocks help protect your money from inflation and can increase your earnings over time. Overall, investing in dividend-growing stocks is a wise decision for those looking to safeguard and enhance their wealth amid rising prices. 5. Commodities. This investment strategy focuses on putting money into direct raw materials like agricultural products, metals, and energy sources such as oil and gas. Investing in commodities offers 2 benefits. First, it enhances investment safety by adding a different type of asset. Second, it can protect your money from inflation, because the value of commodities often rises when the cost of living increases. Commodity markets facilitate both immediate and future trading through various instruments. You can invest in physical commodities, stocks, futures, exchange-traded funds, mutual funds, and bonds. The risk of investing in commodities can be medium or high, and it really depends on what kind of commodity you choose and how you plan to invest. It's wise to get advice from a financial advisor to choose the best option for you. 6. Mutual funds and exchange-traded funds. These investments, managed by professionals, invest in diverse assets like bonds, commodities, real estate, and gold, reducing risk and guarding against inflation while enabling dividend reinvestment. Mutual funds offer professionally managed investment baskets where you can buy daily price shares in stocks or bonds, usually starting from $500. Exchange-traded funds are similar to mutual funds, can be traded like stocks throughout the trading day, usually with lower fees, and there is no required minimum investment. Mutual funds provide a secure investment option with expert management aiming to outperform the market, though they may have higher fees and limited liquidity. Conversely, exchange-traded funds offer similar security with lower costs and the advantage of trading throughout the day, typically tracking a commodity index. 7. Stocks. When prices rise, stocks can be good to invest in because they often make more money than the increase in costs. The S&P 500, for example, usually gives a 10% return each year, which beats the usual rise in prices. Investing regularly in stocks can lead to long-term savings and risk diversification as their value may increase when companies adjust prices in response to inflation. The stock market can be unpredictable, and not every stock performs well when prices go up. Therefore, it's really important to carefully choose and diversify your investments to lower the risk. Stocks are a popular choice for beating inflation and growing your money, but make sure they fit your financial plans and how much risk you're willing to take. The key is to understand your money goals, risk comfort, and investment time to diversify and guard against inflation for steady income and good returns. Remember, investing should match to your personal needs and the current market, so it's wise to get advice from a financial advisor for well-informed choices. Now that you are aware of some recommended investments for periods of high inflation, here are 8 practical tips for making wise investment decisions during such times. 1. Stay updated to economic changes. Stay informed about the current economic condition and adjust your investment strategy to fit. 2. Monitoring inflation indicator. Keep an eye on inflation indicators like the Consumer Price Index to understand the inflation situation. 3. Rebalance your portfolio. Regularly update your portfolio to match market changes and your investment goals during high inflation. 4. Monitor monetary policy changes. Monitoring central bank policies can help you predict inflation and inform your investment choices. 5. Consult a financial advisor. Talk to a financial advisor to make a plan for investing that fits what you want and need. 6. Focus on quality. Choose investments in companies with strong balance sheets and pricing power. 7. Review investment costs. Higher costs can shrink profits, especially when prices are rising. 8. Consider bonds carefully. Choose bonds with shorter maturities which are typically less influenced by inflation. In conclusion, smart investing in times of high inflation means always being alert, ready to adjust, and having a solid plan. Following these tips, you can handle the investment fluctuations and keep your money on track with what you want to achieve. Thank you for watching. I hope you found this video helpful and informative. See you in the next video.